Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Today is June 30th, 2026. And before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. My guest today is the CEO of Oceanic Iron Ore, a company focused on the development of its 100% owned Hopes Advance, Morgan Lake, and Roberts Lake iron ore development projects located in Quebec, Canada. Is Chris Batalha. Great to have you on the show.
Thanks for having me, Jesse.
Let's start things off with a high level view of the iron ore sector. Obviously, an incredibly important commodity, but one that perhaps doesn't get as much airtime as it should. So maybe you could lay out for us what the main catalysts are driving the iron ore market, the current supply chain setup globally, and why investors should care.
So, a lot of people don't know this, but iron ore is the principal ingredient in steel, and it underpins infrastructure and manufacture of anything from buildings to cars and defense sectors, infrastructure as well. Um, you want to care as a person because it's driven or it drives infrastructure spending towards um, development of economies and infrastructures all over the world, and in more developing areas I can focus on, as we will later in the interview, in parts of the world like the Middle East and in Asia and onwards. But in particular, there's a movement towards use of higher quality inputs in manufacturing that steel for a couple of reasons, and therefore it is our view that there will be an increasing premium for premium iron ore products, and that's why you should care about Oceanic and the type of ore that we produce, because not every type of iron ore is produced equally, and it's not of the same quality or quantity. And in terms of, I've touched on supply chain a little bit, but in terms of the supply of the product, um, very much covered by Australia and Brazilian supply. Um, but with that dependence, you've got supply risks, and you can be dependent on certain jurisdictions. And you've seen, not just in the iron ore space, but in other commodities, companies wanting to make sure that they've got adequate supply from either their own domestic resources or through allied countries. And there's an increased focus on that. I don't think anybody would disagree with me on that one. And having our deposit and our project in Canada, being an ally to a lot of countries in the world, and being a trusted jurisdiction to deal with, is another box that gets ticked in terms of a benefit for this project becoming a success.
Let's talk about the geopolitical angle, because obviously a lot going on in the world right now. You touched on it. How do current geopolitical tensions and trade policies influence the iron ore markets? And what are the major trends you think investors should be paying attention to in that area?
So it's about securing that country's supply of whatever mineral they need, and being selfish to Oceanic, it's just supply of inbound material for infrastructure. Again, like I've said, you want to have, or I should say, you don't want to be constrained as to where you source the material. And there are certain countries that are not allies with countries that require that input. And so you want to make sure you have those allied countries with that product. I talk about Canada being one of those more friendlier countries to deal with. And so when you look at, from our perspective and looking outwards and where we could supply the product to, it's a plus, because we've got the benefit of supplying it to many, many countries. And I'll give you a few that have had some desire, an increased desire for the product. One is the Middle East with their impetus for infrastructure development. One is Japan, because Japan's mandated by government to source high quality iron ore, which we have, and I can talk about in a little bit again. India is another jurisdiction where we're friendly enough with India, but also the fact that India had been domestically supplying their own steel inputs for quite some time, but they have run out of high grade material to the point where it's estimated that by 2030 they'll be a net importer of 40% of their material. So we've got these openings and avenues outside of China, which has dominated the steel sector for quite some time, and where the seaborne iron ore product has gone to deliver to multiple markets and not just be constrained to China.
What's your base case outlook for iron ore prices and market fundamentals in 2026 and beyond? And what are the top bullish catalysts and potential bearish risks that you think could change the picture?
I love predictions for commodity prices. They're always somewhat imperfect, but uh, in the short term, I can see it being quite stable. We hover, we don't have a standard price in the iron ore space, Jesse. It's not like gold where you have a market price. Every iron ore product is different coming out of every iron ore mine. So you start with a benchmark price and then you work your way up or down based on the level of purity of your iron ore compared to that benchmark, as well as the impurity level, because there are some impurities that need to be accounted for when you're selling your product to off-takers. One of the more standard benchmark prices that are seen in the market is the 62% CFR iron ore price. And that's hovered in the $100 to $110 range over the last little bit. I see that continuing in the short term. I think there's a risk of it having a dip in the short term only. And I only say that because there's a quite massive project that's come online in the last little bit called Simandou in Guinea that's partly run by Rio Tinto. And it's a project that's had $20 billion invested in it and will be turning out, once it fully ramps up to 120 million tons per year. So it's quite a bit of supply in there. What the market doesn't realize is that supply and that influx is only replacing the depletion of existing mines. It's not more than overcompensating for what's being depleted in the market. So that should tell you that it shouldn't really have an impact on the price. But psychologically, I can see there being this view that there being a glut in the market and there being a short-term impact. But that's short-term. And when you think of medium to long-term, I think the 62% benchmark will hover where it's at or maybe come up a bit. But where it's really relevant is when you have a high-quality product. Because when you have something that's north of 65%, let's say, in purity, those materials and that ore to be processed economically and shipped out is in finite supply. And so when you've got something that's finite supply, that'll be more in demand in the years to come. The price increase is inevitable. So I won't say a number, but I think in the medium term, which is relevant for Oceanic investors because, we're on that pathway to be in production in the medium term and not in the short term. That's where you get more certainty in terms of a kick on the price.
Well, let's dive into Oceanic Iron Ore and how the company fits into the picture. Can you start with an overview of the company, your projects, and your long-term game plan?
Of course. The asset was acquired by one of our largest shareholders. His name's Frank Justra, who I don't think I need to introduce. Founder of Goldcorp, founder of Wheaton, Canadian Mining Hall of Fame. It's a very successful resume in his own right. And then it was led he was CEO and chair at the time, Stephen Dean, who I've worked with for the last 15 years. Stephen Dean has been a CEO for the last 35 years. He's turned several companies from a few million into a few $1 billion in market capitalization before ultimately selling them, which is not his MO. It's just what wound up happening. And he and I have been teammates and partners on a couple of gold projects separate to Oceanic. One called Atlantic Gold that sold for $800 million in 2019, and one called Artemis Gold, which has the Blackwater project in central British Columbia, which was built on time. And by the time we execute the expansion on that, I say we because I keep thinking I'm with Artemis. I left them a couple of years ago, but to do Oceanic. But by the time they do their expansion, they'll be the second or third biggest gold mine in Canada. And to go from a value of what was $30 million or whatever it was to today somewhere close to 8 billion has been nothing short of a success story. So it's really important to start with the people because the people make the project happen. And the third person to talk about is Ryan Beatty, who's the largest shareholder of Oceanic and was also the largest shareholder of those other two companies that Stephen and I were involved with, Artemis and Atlantic. He owned 30% of those. It's important to mention these things because it comes with the track record of these individuals, and it also comes with the fact that we put our money where our mouth is. And with those other two companies, board management owned close to 40% of the stock. And in this one, on a fully diluted basis, we're at about 60% of the stock. So we're not one of those management teams that has a minimal amount of interest in a project and we work for some sort of buyout. We're not like that at all. We invest in the projects that we work for. So those are the people. Frank bought the asset at the end of 2010. In the time of the iron ore super cycle, we did a ton of work, progressed it, fast tracked to PEA, PFS, metallurgical test work, and then we had to put it on pause in 2013 because, Jesse, if you know that the iron ore price tanked to about $50, and it stayed there for about 5 or 6 years, given the super cycle had effectively reversed and the demand for steel inputs had quelled significantly. And that lasted for about 6 years. And then we came out of that, and then we had to pause for another while because our significant shareholder at the time was Chinese, and there have been tensions between Canada and China that started in the Trudeau administration that wouldn't allow us to progress this in earnest until we got the Chinese shareholder off the block, and it just took a really long time. So we got that done last fall. So after a strategic hibernation of 12 years, we're back, and we've progressed the project again. We've restarted it. It is a project, Hopes Advance, that is multi-generational in life of mine. High purity, as I've said before, the product that it produces is a 66.6% iron ore product with low impurities. And if we decided to, we haven't done it yet, but if we ever decided to improve on those purity and impurity levels, we would be seen as a critical mineral federally and provincially. So we've got that profile with us. The other hallmark statistics we have and attributes we have of the project is that it's low cost relative to our peers. It has a $1.2 billion capital cost from our last technical study, and also has an operating cost of $30 a ton US. And that is very low compared to our peers in Quebec. And the reason for that is all of our peers in Quebec, we want success for them all, but they also need a significant amount of rail to get to a port. And Jesse, the iron ore business is as much a transportation logistics business as it is a mining business, because half of your all-in cost is just getting it from your mine to the end customer, whether it's through rail and ultimate a shipment out to that end customer. We don't need rail. We're at the water. We're 25 kilometers from the bay, so we avoid all the headaches, the operational, the logistics constraints of a rail, and obviously the cost. And because we don't bear the cost of it, we don't have to build such a massive plant to justify a payback period. So that's why we can compete rather well on cost. If you look at any other developer in Quebec, for example, they're not looking to build for anything less than $5 billion US. And I focus on Quebec, Jesse, but when you look at the high purity iron ore market, I focus on Quebec because it's one of the two main jurisdictions that have that product en masse. It's Quebec and it's Brazil. And Brazil, most of the properties are owned by Vale and are being run or built by Vale and being done quite well. There are other pockets in the world, and it's possible that they produce, but they have their own challenges, whether it's just getting out to a port or having political challenges or war challenges, that sort of thing. So that's a bit about the project. That it also comes with a $1.4 billion MPV at an 8% discount rate and a 17% IRR, which is typical for bulk-based metals. But the things you want to take away, Jesse, is you don't need rail in a transportation logistics heavy business. You have long-lived asset, and you're at Tidewater in a tier 1 jurisdiction. With those attributes, you don't have very many standalone development stories out there that are undervalued in the marketplace. We're trading at a 0.1 multiple to NAV, where we should be much higher, and that's where the opportunity lies for your viewers.
So it sounds like Hopes Advance is the flagship project. Some great color that you were able to provide there. What about Morgan Lake and Roberts Lake? Are these, what is the phase that they're in right now? What are the plans for those projects moving forward?
So there are other project areas. They're bolt-ons to what would be Hopes Advance. They have historical resources, and it comes with a profile that can generate. That's something that's also high grade, but it's not developing those project areas, we just don't need to right now. Hope's Advance is more than sufficient to get on. All those economics are based on Hope's Advance. And not only that, Jesse, there are 10 deposits in Hope's Advance. And that study that we did, the PEA from 2019, only covers mining three of those 10 deposits. So there's still other deposits within Hope's Advance. There's more at extension, there's more at depth. But there will be a day where we explore further and establish a current mineral resource for Morgan and Roberts Lake from and upgrading it from a historical. Now's not the time. It would cost tens of millions of dollars, and I don't think we'd get the credit for it in the market, and our money's better spent progressing on Hope's Advance. And it's likely something we do with operating cash flows from Hope's.
Yeah, I think that's a smart strategy to have the focus plan on where the biggest possible payoff is. What about the company's current cash position? Could you talk to us about cash on the balance sheet, how much runway that gives you, and plans to raise more capital as needed?
We think it goes to the broader question about how much time and money we need to get a final investment decision. We think we're in the 3.5 to 4-ish year time period to get the final investment decision, and that'll probably cost us something like $80 million. We raised 50 of it in February, and that's roughly our cash position at the moment. So there will be a day we'll have to go and raise the rest before we get the final investment decision. And then what after that? It's you usually have a strategic partnership in the iron ore space where you have someone who helps you finance the build. We don't need them to get us to the decision to build, but we want their input on the design of the product, because that partner will likely want the offtake on the product. They want exclusive rights to purchase the product. And if they can have some sort of influence or say in how and what grade, what impurity they want it at, and at what volumes and at what production rate, given they'll be an owner of the asset, a part owner of the asset, we want their input on that. And so that's where we see the development of the asset going. And once it's at final investment decision, we put in the capital, and that strategic investor would put in, say, half of the equity required, depending on their ownership stake. And they go and find the lender, because we would assume, say, a 50-50 debt equity split in exchange for ownership of the asset, say up to 50%, and then the commensurate offtake. In terms of near-term catalysts, which I appreciate was one of your earlier questions and I didn't fully answer it, we're looking to have a PFS out in the fourth quarter of this year, because our PEA, as much as we refer to it, and it is our current technical report, it is 7 years old and it needs refreshing and it needs advancement. So when I talk about some of the capital costs, 1.2 billion capex and $30 a ton opex, those are 2019 dollars. So those need to get updated for sure. And so that will be a big catalyst for shareholders. We're building out the team as we speak, and we've announced some of those things, and we're restarting the environmental permitting work, which is a very necessary step and the most critical path timeline to get things off and built as quickly as possible.
Great. Well, I'll end by opening the floor to you. Is there anything we haven't yet discussed, or anything that you think it's important to emphasize to potential shareholders of Oceanic Iron Ore?
I've done it before, but it bears repeating. We're in a space where precious metals has seen a lot of attention given where the underlying commodity price has gone. You shouldn't be sleeping on a commodity like iron ore. It has the single largest share of mining revenue in the world. When you look at mining revenue by commodity, it's that steady horse in the race. And the stock itself, and I'm talking about Oceanic specifically, again, is undervalued. To be at 0.1 NAV is not right. We're not an exploration stage company. We did hibernate, but for very strategic reasons. And we should be at a much higher multiple. And we've got catalysts coming up that will help with the re-rate, and we're getting more attention from the mining community. And I stress that this is an asset that has a distinct advantage in that we don't have the rail component in a transportation logistics business. And that should not be underestimated by anybody looking at this story when they look at de-risking factors of investing in a junior story. And you compare that with the life of mine of the asset and the management team behind this, it should sell itself in terms of investment opportunity right now.
Fantastic. Well, I'm going to put a link in the description below to Oceanic Iron Ore's website as well as social media so people can follow along with the company. Chris, fantastic conversation. Thank you so much for coming on the show.
Thank you, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.